Good morning, friends. So, friends, today we are discussing Ind AS 115, the second day of Ind AS 115. So, in the 5-day series session on Ind AS 115, today is the second day. And, friends, in the first 5 minutes, we will recap yesterday's session and then we will carry it forward to the next part of the Ind AS 115. Friends, yesterday we have discussed this Ind AS 115 revenue from contract with the customer. This is the single standard which talks about the revenue measurement and recognition. Okay. So we have discussed yesterday that this standard includes each and every revenue, right? Except there is a negative list, except if there is a leasing revenue, it will come under Ind AS 116. If there is a revenue from financial instruments, it will come under Ind AS 109. If it is a revenue from insurance contract, it will come under Ind AS 117. If it is a revenue between the two companies where the commercial substance are not there, I mean to say the companies are doing non-monetary exchanges. There are similar line of companies and they are selling goods to each other. And when I'm saying selling goods to each other, it means they are just exchanging the goods with each other. So in that case, it will not be classified as a revenue to be covered under this standard, right? So these kind of aspect we have discussed that these revenue will not be covered under Ind AS 115. Otherwise, each and every revenue will be covered under Ind AS 115, including construction contract revenue. Friends, then we discussed for we talked about the 4 pillars of accounting: recognition, measurement, presentation, disclosure. For each and every accounting of revenue means recognition of revenue, measurement of revenue, presentation of revenue, and disclosure of revenue. For all these aspects for revenue, we need to go through with 5-step model. And yesterday we have done a helicopter ride to see the aerial view of Ind AS 115, and there we have seen for any kind of a revenue, first we need to check whether it is a contract with the customer, because the title of the standard is revenue from contract with the customer. Revenue from contract with the customer. So first it is a revenue standard, means revenue is an income which is arising out of the ordinary course of the entity. Right? Then is a contract. Contract is an agreement enforceable at law, right? Where you can enforceable the rights and obligations. Okay. Customer is a party who obtains goods and services, which is an output of the entity in exchange for a consideration, right? So the first step is identify the contract with the customer. Is it a contract? Is it a valid contract? Is there any consideration, right? And whether this contract is with the customer. If answer is yes, then you have to go to the step number 2. Step number 2 talks about determine the performance obligation. Friends, this is a substance-based standard, right? In accounting, we also have read this substance over form. This is like a characteristics of an accounting. Substance over form, right? And this substance over form is not a new concept. It is an accounting concept and it is there since ages. But friends, if you look at Indian accounting standard in comparison to accounting standard, you will find the substance over form is more prominent, more rich, and it is more involved in case of Indian accounting standards, right? So friends, the standard says that if you are selling goods or services, you have a multiple promises, you have a multiple performance obligation, right? So the entity, whenever the entity will satisfy the performance obligation, in that case, the entity has to recognize the revenue on a milestone basis, means whenever the entity will satisfy each performance obligation, fulfill each performance obligation, the entity has to recognize revenue only to the extent of that performance obligation, right? Friends, it does not matter whether the entity has collected the entire revenue or the entity has not collected the entire revenue, does not matter, right? But the revenue has to be recognized on an accrual basis, right? To the extent the performance obligation has been satisfied. Step number 2 was determination of performance obligation. Then friends, once you have determined the performance obligation, but the contract is a single contract, and within the single contract, there could be a multiple performance obligation. And yesterday we have seen an example of air condition. You went to buy an air condition, right? But with air condition, you are getting three things with air condition, right? So contract is one, but the performance obligation was four. Then determine the transaction price. Now, what is my transaction price? So transaction price is a price which you are paying in that transaction. Okay. So we will be discussing in detail, but for the time being, the third step is determination of transaction price. The fourth aspect is allocation of transaction price into multiple performance obligation. When you went to buy an air condition, you haven't received the breakup of what is the cost of AC unit, what is the cost of stabilizer, what is the cost of installation, what is the cost of two maintenance service, right? The shopkeeper, the supplier is only giving you a bill of air condition for 50,000 rupees. That's all, right? So now you need to allocate. You means the service provider, the supplier, the revenue earner has to recognize the revenue. But how to recognize the revenue? First, we need to measure the revenue. For measuring the revenue, for measuring the amount of performance obligation, right? We need to allocate the entire transaction price into the multiple performance obligation. Sir, how will we do that? That is why we have 5 classes. There are 5 steps, and we have 5 classes for covering all these 5 steps, right? So friends, then we need to allocate. Once the allocation will be complete, then we will recognize the revenue either at a point in time or over a period of time. Okay. So these were the 5 steps we have just seen in the last class. And friends, of course, presentation and disclosure also plays an important role, that how you present and how you disclose, which we will also discuss in the last class. Friends, yesterday we have also talked about the step number 1 in detail, identification of contract with the customer. We discussed a contract could be express, could be implied, could be oral, could be written. We took so many examples as well to understand this concept. And friends, the contract should be enforceable. The contract should be enforceable. For example, I have announced that I am teaching financial reporting free of cost, for example, right? There is no obligation. I am not taking any money from anyone, right? So let's say, and I have just announced, okay, I have not taken any commitment. I have just put this thing on Facebook, LinkedIn, social media, and I have given a free link. So anyone who wants to join, he can join, for example. So let's say tomorrow my session is scheduled, but I haven't come to the session. Whether it is kind of an arrangement where one can sue me. Am I obligated to come tomorrow? Yes or no? Of course, no. There is no enforceable obligation. There is no enforceable obligation, right? But for example, so I'm talking it at my own. I'm not talking from the ICAI perspective. I'm not talking from ICAI perspective, right? So I'm just talking at my individual capacity. I've just put the link over the LinkedIn or social media 2 days back, right? I'm not talking about ICAI, because ICAI is an organization. It is an institution. Some responsibility lies there. Okay. So I'm talking in my individual capacity. Will you sue me? I haven't done any contract with you guys. I'm not an authority. I'm not a body. I'm not an institution. Right? Are you getting me? But for example, I have announced that I'm starting a batch for which enrollment is required. People have deposited the money, right? And people have committed to me. I'm committed to the people. Okay. So if I'll not come to the class, whether they can sue me, of course, yes. Why? Because we have entered into a contract. You guys become my customer. I'm a revenue provider. I'm a revenue earner. Are you getting me? So the first step talks about that contract should be enforceable at law. One can enforce the rights and obligation. Means if anyone who is breaching, there should be a penalty. There should be a penalty. Okay. Is that clear? Then we have discussed 5 conditions about this contract. Then the 5 condition was contract should be approved. The rights and obligations should be defined. The payment terms should be defined. There should be a commercial meaning of that contract. There should be commercial substance, right? And you have to recognize revenue only to the extent it is probable to collect, right? You are sure, you are more than 50%, you are sure that I'll get the money, right? For example, you are not 100% sure. For example, you think that I know this customer, if I'll sell him the goods for 100 rupees, he will always deduct, let's say 30-40 rupees, he'll always deduct. So you only expect the consideration of 60%. So in that case, upfront, when you are transferring the performance obligation, when you're delivering the goods or services, upfront you have to recognize the revenue of 60 rupees, not 100 rupees. But sir, subsequently, when the negotiation, the deal will close, subsequently he will pay me, let's say 80 rupees. Then subsequently you will recognize an additional revenue of 20 rupees, right? Friends, then we discussed the concept of combination of contract, right? And we talked about if two or more contracts are happening with the same party or with the related parties within the same time or nearly the same time, in that case, the contract could be combined provided one of the below conditions should be satisfied, right? So what are those three conditions? The three conditions were, what were those three conditions? Can anyone tell me what were those three conditions? When we need to check whether this contract could be combined or it will not be combined. What are those three conditions, guys? Condition number one, whether the entire contract has been negotiated as a single commercial transaction, right? Whether it has been negotiated as a single commercial transaction. Okay, means you have negotiated as a one single contract. Number two, what is number two? Whether the amount, the consideration of one contract depends on the other contract. Number three, whether the goods and services are the single performance obligation, right? Whether the goods and services are the single performance obligation. Yes. So these three conditions you need to ask, and if you will get the answer as a yes for any of these three conditions, then you can say that we can combine the contract. My dear friends, contract is a separate aspect, right? You are entering into a contract, but that contract may have multiple performance obligation. For example, when you bought an air condition, you were entered into a single contract, right? But that contract has a multiple performance obligation. You understand the difference between the contract and the performance obligation? Yeah? Yes? You understand that? Okay, very good. So friends, we talked about that and we discussed that if it is a separate contract, so let's say if the answer is no for all these three conditions, if the answer is no, then what you will do? You will account for as a separate contract. But if the answer is yes, then you can combine the contract, right? You can combine the contract and consider the multiple contract as a single contract. Friends, then we discussed accounting and we talked about, you remember the training session, 10 session, 20,000 rupees, 2 lakh rupees. Then when 8 sessions were delivered, the company decided to obtain more sessions, right? So friends, if there is a contract modification, means the scope of the contract is increasing. And the price is also increasing on the basis of market value. In that case, the increased scope will be treated as a separate contract. Okay, sir. So we understood that increased scope is treated as a separate contract. Okay, sir. When it will be considered as a updation in the existing contract, when it will be considered as a modification in the existing contract. So friends, in two situations, it will be considered as a modification in the existing contract, right? So friends, not in two situations, the situation will be one, but the outcome could be two. Friends, when there is a change in the scope, but the price is not in line with the change in the scope, right? So scope is increasing, but the price which is changing, it is not commensurating with the increase in the scope, or the scope is not changing, but the price is changing, right? The price is changing probably. So friends, there could be two situations. Number one, in case of modification, number one, the modification may results in termination of the existing contract and creation of a new contract, right? Termination of the existing contract and creation of a new contract, or modification may result in the updation in the existing contract. You remember yesterday we have discussed this example of classes. And there we have, what we have done there, we have recognized the revenue on the basis of the revised amount. So let me show you quickly so that you will be able to remember that. I hope the entire session of yesterday is in your primary memory, not in your catch memory. Yes. So friends, this is the example I have covered in yesterday's session. Contract modification, case 1, where the increase in scope in line with the increase in prices. Then case 2, where the scope has been increased, but the price has not been increased at market value, right? What we have discussed there we have compute the revised total consideration, revised rate per session, and then we recognize revenue. You remember that? Yeah. Okay. Correct. So friends, but in some cases, let's say the scope is not increasing. Let's say you have entered into a contract for 1 year for getting some services, security guard services, okay, from group 4 securities. The security guard has completed 6 months and this contract was for 1 year, and the price was 20,000 rupees per month. And the entire year contract was 2,40,000, but it was a monthly contract kind of thing. Monthly payment should be there, monthly invoicing was there, and you are paying 20,000. When 6 months was completed, the customer has requested to group 4 security that, our financial position is getting worse, and I request you to decrease the amount of the security guard charges which you are charging me. Group 4 securities, who is recognizing the revenue, so they have entertained the request, and for the another 6 months, they have decreased the price from 20,000 to 15,000 rupees. Friends, in this case, whether this company already paid 20,000 rupees or group 4 received 20,000 rupees, is there any change in the prices or any change in the revenue which was recorded earlier? No. So this will be treated as a termination of the existing contract and the creation of a new contract. What I mean to say, prospectively, the company will recognize revenue to the extent of 15,000 rupees per month, right? Why? Because the performance obligation was different. The performance obligation was distinct, right? The services which was provided by the security guard in the first 6 months, right, was different. And the services which was provided by the security guard in the next 6 months was different. What does it mean? It means the security guard who has provided the services in the first 6 months, right? He was there on the gate. He was ensuring that no trespassers should be entered, right? There is no any, nuisance element who can enter. So whatever services he has provided in the first 6 months, let's say if he would not have provided his service diligently, can you say that now whomsoever new security guard is coming, can you say that you have to provide services for last 6 months also? Can you say that? He cannot enter into a time machine and he can again provide the services of last 6 months. So in the last 6 months, whatever services he has provided, the customer The customer, whatever the customer has benefited from the last 6 months services, it cannot be repeated. It cannot be repeated because the services given is consumed as and when it is given. Okay. So friends, my dear friends, in case of a contract modification, if the goods and services which is provided are distinct means different. Different means whenever the goods and services provided, the customer has got the benefit. The customer was benefited. The customer has consumed. Right? In that case, if it is distinct, in that case, if there is a modification in the contract, it will be treated as a termination of existing contract and creation of a new contract. But if the goods and services are not distinct, it is a single performance obligation. In that case, it will be treated as a updation in the existing contract. For example, sir, can you take an example? I am a contractor, right? And Pooja has given me a task to construct her house. I am a contractor. I have to recognize the revenue. Okay. So Pooja has given me a task. I have to construct her house. So I am doing the construction activity. And, I told that it will take around, 150 days. And I will charge 2000 rupees per day. After 30 days, I told her, additional 50 days will be required in this construction. Additional 50 days means not 150, 200 days total, in total, 200 days, right? And I told that, then she told me that, Mr. Alok, you told me that you only 150 days is required. And I have given a budget of 3 lakh rupees for the construction of my house. But now you are saying 50 more days. I told, okay, no problem. An additional 50 days will be at a price of 1000 rupees per day. Right. So first of all, in this case, and let's say 31st March is approaching. I have already completed 30 days. So in this case, whether I should recognize revenue for this 30 days multiply by 2000, or since it is a single performance obligation, I have to construct, because until and unless I'll complete the house, the customer will not be benefited, right? Let's say in the 30 days, I have just done the excavation and digging of that, plot and everything. So whether Pooja will get benefited, Pooja will consume that service, whatever I have provided so far? Answer is no. Right? She will, you're right, Anila, she will enjoy, she will consume, she will be benefited once the construction will get completed. So it is a single performance obligation, not a multiple performance obligation, right? So my performance in the past and my performance in the future is interrelated, interdependent, right? It is depending on each other. So in this case, if there is a contract modification, it will be considered as an updation in the existing contract, not the termination of the existing contract. Is that clear? Okay. So friends, I have covered in the last 20 minutes, I have covered the entire yesterday session in detail for the recap of you guys. Okay. So now I am going to start step number 2, determination of performance obligation. I'm going to discuss step number 2. And friends, yesterday we have covered around 8 to 9 illustrations from ICAI study material as well. So let me call out who all are there on the screen. So good morning, Dev. Good morning, Abrakesh. Good morning, Nilay, Pooja, Anila, Zini, Usha, Nisha, Dhanya, Ayush, Tushar, Anila, Vignesh. Good morning, everyone. And let me see who is there offline on that portal. So few students are also there. Good morning, Hardik. Good morning, Ramya. Good morning, Rajat. Okay, so good. So friends, day 2 and step number 2, right? Performance obligation. So obligation and performance. What is a performance obligation? You are obligated to perform. Perform means the other parties would get benefited. Friends, if you understand, the heart of these Indian accounting standards, right, you will read the mind of these Indian accounting standard, I would say. अगर आपने इनके दिल को समझ लिया तो आपने इसके दिमाग को भी समझ लिया. See, this revenue standard, if you see revenue from contract with the customer, this revenue standard is a very customer centric standard, right? Customer centric standard. Whether customer is getting benefited, in that case, the service provider has to recognize a revenue. Correct? Correct. Let's say I have given a contract, or I have entered into a contract with Vignesh, that Vignesh, I'll teach you in days 115 and I'll take 5 classes. Okay. I complete 1 class, right? And I have to complete the remaining 4 classes. Vignesh, whether these 5 classes put together is a single performance obligation or every day is a separate performance obligation. I mean to say, if myself as an educational institution, if I have to recognize the revenue of Ind AS 115, whether I should recognize revenue every day once I complete day, or I should recognize revenue when entire 115 will get completed. When entire 115 will get completed. Why? Because yesterday I have only talked about a single portion of this standard, right? Identification of contract with the customer. And you guys have understood 100% of it. Still, will you be able to solve the question in the examination? Will you able to apply it in the practical life? Will you be able to solve any revenue example, any illustration? Answer is no. Why? Because I've only talked about identification of contract with the customer. You still need to see what are the performance obligation, what is the transaction price, how it is going to be calculated, how it is going to be allocated, then how the revenue is going to be recognized, right? So this entire aspect is a single performance obligation, right? So friends, you need to understand what is the performance obligation. Okay. So we are discussing now what are the performance obligation, what is the meaning of performance obligation. My obligation is to teach you entire Ind AS 115, and when you will get entire Ind AS 115, then only you can get benefited. You will not get benefited every day when my class will get complete. Not get benefited, I mean to say, from the output perspective, which is examination, right? I'm not saying that yesterday you was not benefited, today you will not get any benefit. Otherwise, your morale will down and you will not join the classes. Correct? So you will get benefited once entire Ind AS 115 will get completed. And of course, for entire Ind AS 115, you have to sit for another, for the entire 5 days. Correct? So this revenue standard is more of a customer centric standard. I am a service provider. Okay. Till 31st March, I have completed 2 classes. Or the good example is, let's say, take example of 30th September. All these listed companies are closing their half yearly books tomorrow. Correct. So let's talk about 30th September. Till 30th September, actually, I'll complete only 2 classes. Then I'm asking myself, right? Can I recognize a revenue? Can I recognize revenue for these 2 classes? Then I'm asking myself that whether Ind AS 115 was entire Ind AS 115 is a single performance obligation or every day is a separate performance obligation. Then when I ask this question, I am answering my question to myself. See, I have only covered 2 classes. I have only talked about the identification of contract with the customer and determination of and identification of performance obligation, right? So having said that, the students have understood these 2 steps. still they will not be able to solve this entire question of Ind AS 115. It means the student will not get benefited until and unless they will complete the lectures of Ind AS 115, right? So this is what I have answered to my question. Okay. Okay. It means I have to complete this in the next 3 classes, then only I can recognize the revenue. Means these entire 5 classes are interdependent, interrelated. Okay. So once these 5 classes gets complete, then only the counterparty, my customers, my students will get benefited. And hence it is a single performance obligation, right? Is that clear? Is that clear? So once these classes will be completed, then only I can recognize the revenue. I hope it is clear to everyone. So friends, I will explain this performance obligation part. When you read this standard, right, theory, it seems like it is a very complex. The words are very complex, right? The words used are very complex. But not to worry, you have to understand the essence of the standard. You have to understand that what standard talks about, okay? Because in examination, this complex word doesn't matter. In examination, the concept matter, and whether you know the concept very well and can apply the concept very well, that is important. Performance obligation is a promise, explicit or implicit, to transfer to a customer either a distinct goods or service or a series of distinct goods or services that are substantially the same and have the same pattern of transfer. What could be a performance obligation? A distinct goods or service. Distinct means different. So different means, so distinct exactly does not mean different. Exactly does not mean different. You can say that different in terms of, for example, I have ordered 20 mobile phones to Apple. I have ordered 20 iPhones from Apple. Till 31st March, Apple has delivered only 15 mobile phones. The 5 mobile phones have been delivered in the month of April. Now, question is, whether these iPhones are iPhones, all iPhones are same. Yes, it is interchangeable. All 15 iPhone 16, correct. Same color, same configuration, same storage capacity, same memory, everything is same price. So I need to close my eyes and I need to just pick any of the iPhone 16. It is absolutely same. Friends, tell me, I have given a single order. I have given a single order of 20 iPhones. Only 15 iPhone is delivered to me and 5 iPhone will be delivered in the next financial year. Apple being a service provider, can Apple recognize the revenue of this 15 iPhone? I need answer from each and every one of you. Hardik, Hemant, what is your view? Whether this entire 20 iPhone is a single performance obligation or these 20 iPhones are not a single performance obligation. For looking at the performance obligation, you need to see this is a single contract, my dear friends. Please understood the difference between a single performance obligation and a single contract. This iPhone contract is a single contract. In a single contract, I have ordered 20 iPhones. But whether each and every iPhone is a distinct good or service or not, whether each and every iPhone is a distinct good or not. Distinct means different. Different means separate. Different not in terms of its form, different not in form of its size, different not in form of its composition. I mean to say, let's say 15 iPhone has been delivered, whether this 15 iPhone can be used by 15 people, or these 15 people will be able to use this 15 iPhone only when the another 5 iPhone will be delivered. Yes or no? So these 15 iPhone can be used, right? So friends, standard says that if if so a performance obligation, if a performance obligation is distinct goods or service, means a separate goods or service, means a different goods or service, and customer can get the benefit and customer can use that, customer can get the benefit, in that case this will be treated as a separate performance obligation. Means the revenue, to the extent these distinct goods and services have been delivered, the revenue can be recognized. Just apply logic. I don't know why you guys are saying no. Guys, accounting is not like, if you see, accounting starts from counting. Apply the logic. आप खुद सोचो ना, अगर एप्पल ने 15 मोबाइल फोन डिलीवर कर दिए तो 15 मोबाइल फोन का रेवेन्यू तो रिकॉग्नाइज करेगा ना, क्योंकि जो अगले 5 मोबाइल फोन इस 15 पे डिपेंडेंट नहीं है. आर यू गेटिंग मी? जैसे मैंने इंडेस 115 का एग्जांपल लिया था, मैंने आपके साथ 2 सेशंस कंप्लीट किए, तो जब तक मैं अगले 3 कंप्लीट नहीं करूंगा, क्या आपको कंप्लीट बेनिफिट मिल पाएगा? क्या आप उस नॉलेज को यूज कर पाओगे? आंसर इज नो, बिकॉज यू कैनॉट सॉल्व इंडेस 115 क्वेश्चंस, राइट? द क्वेश्चंस नीड्स इंटायर नॉलेज. बट अगर वो 5 आईफोन ऑर्डर नहीं हुए, 5 आईफोन डिलीवर नहीं हुए, तो क्या टू द एक्सटेंट ऑफ 15 आईफोन कैन द कस्टमर गेट द बेनिफिट? टू द एक्सटेंट ऑफ 15 आईफोन, कैन दिस 15 आईफोन बी यूज्ड बाय 15 डिफरेंट पीपल? Yeah, yes, everyone is saying now yes. So friends, have you understood the meaning of distinct good or service? Just remember one thing in your mind. This standard is a customer centric standard. Whether customer will be able to use, that service or that goods when it is provided or delivered. Is that clear? Means the future service or goods is not highly interrelated, interdependent, customized on the past delivered goods and services. Are you getting me? Yeah. So friends, what is a performance obligation? It is a distinct goods and services. Distinct means different, separate, but different or separate actually does not mean that it has to be 2 different kind of a goods. The goods are similar, the goods are same, but these 2 goods will provide the 2 separate benefit, means to the 2 different set of people. Okay, this is not dependent on each other. Is that clear? Or it could be a series of distinct goods or services that are substantially the same and have the same pattern of transfer, or a series of distinct goods or services that are substantially the same and have the same pattern of transfer. A series of distinct goods or services means security guard. You have entered into a contract with the security guard, okay, for a period of 1 year. So security guard is giving you service for every day, right? So tell me whether the service of security guard is a series of distinct goods or service or not. Whether the service of security guard is a series of distinct service or not. I mean to say whether the moment the security guard is providing his service, whether the customer is able to get the benefit or whether the customer is able to consume. Yes or no? Yes. I mean to say security guard is there on the gate, right, for today. So I have got the benefit of that security guard for today. Means he was ensuring that no thieves, no trespassers, no nuisance element will be entered to the gate, enter inside my organization, enter inside to my premises. Okay. And whether, so tomorrow security guard will also provide the service. Day after tomorrow, security guard will also provide the service. So each and every day service is a distinct service. is a different service. Different service means in future, I cannot correct or I cannot rectify or I cannot avail the service relating to the past, right? So everyday service is a different service. Newspaper seller, newspaper vendor is providing you newspaper every day. Every day. Whether each day newspaper is a distinct good or not. Yes or no? Whether each day newspaper is a distinct good or not. Yeah, distinct. Whether the news is depending, whether the newspaper, the tomorrow newspaper is dependent on the today's newspaper. It is read separately. Very good, Dev. It has to be read separately. It has a different news. It has a news relating to the yesterday. I mean to say, if you got the today morning newspaper, tomorrow you will get the news for today. But it is a series of distinct goods or services. Sir, if it is a separate services, or why we understand it is a series of separate services. So for that security guard or for that newspaper, whether everyday billing is required. Everyday billing should not be required. For the sake of convenience, the companies are like security guard provider companies or newspaper vendors. They are raising their invoice on a monthly basis. But my dear friends, what happens on 31st March? On 31st March, this security guard company has not raised the invoice, but whether they can accrue the revenue, answer is yes. Answer is yes. For the period, their security guard is providing the services to the client. To that period, they can accrue, they can recognize the revenue. Is that clear? So have you understood the meaning of distinct? Have you understood the meaning of distinct? The meaning of distinct means the goods and services. If the goods and services can provide the benefit to the customer, if the goods and services can provide the benefit to the customer, right? In that case, it can be considered as a distinct goods or services. Or series of distinct goods and services means the goods and services which are substantially the same and have the same pattern of transfer. 20 iPhones. What is that? Series of distinct goods and services. Series. Each and every iPhone is capable of providing the benefit to the customer. Is that right? I believe, my dear friends, I believe you have understood the meaning of distinct, right? Is that clear? Okay. So performance obligation is distinct good or service, or it is a series of distinct goods or services which are substantially the same and have the same pattern of transfer. The determination of performance obligation depends on the contractual terms and customary business practices, and it has to be identified at the contract inception. Yesterday, one of the student was asking me, sir, whether we need to identify these performance obligation at the inception of the contract. Answer is yes. Okay. So we understood the meaning of performance obligation. Now we'll discuss more on this meaning of distinct goods or services, meaning of performance obligation. Friends, the standard has given you two guidance. The standard has given you two steps evaluation, whether the goods and services are distinct or not distinct, right? Whether the goods and services are distinct or not distinct. So let me take you on the Excel file. Okay. I hope my Excel file is visible to all of you. Yes or no? Is it visible? Okay, very good. So step number 2, we are discussing step number 2. Determine the performance obligation. Performance obligation. I can guarantee you after today's class, you will learn this concept by heart, that how to determine the performance obligation, right? The only thing is, whatever layman language examples I'm taking, just try to concentrate on those examples. And of course, from the examination perspective, we will be covering a lot of illustration. First, we will discuss the concept, right? Understood the examples. and then we will come to the illustrations. Okay, fine. Fine to all of you? Yes or no? Yes or no? Friends, determine the performance obligation and we'll call it as a PO, performance obligation, not a purchase order, right? So many of you are pursuing your articleship. So PO means purchase order, but don't consider this as a purchase order. This is a performance obligation for the sake of today's discussion. What is PO? What is performance obligation? Performance obligation is a PO is a performance obligation is a distinct goods or service. Performance obligation is a distinct goods or service or a series of distinct goods or service which is substantially the same and have the same pattern of transfer. Which is substantially same or have the same pattern of transfer. Right? It is a series of distinct goods or service which is substantially same and have same pattern of transfer. Right? Like newspaper, like security guard service, like accountant service, right? Clear? Okay. Now, when goods and services are considered as a distinct, when goods and services are considered as distinct, means different, means separate performance obligation, distinct. When goods and services are considered as distinct, when? Tell me. The standard has given you two guidance, right? The standard has given you two steps to evaluate when goods and services are considered as a distinct, right? The standard says that you have to check at goods or service level. You have to check at goods or services level whether customer can get the benefit of the goods and services at their own or with the help of readily available resources or with the help of readily available resources. Whether customer can get the benefit of the goods and services at their own or with the help of readily available resources. Sir, what does it mean? Have you guys bought a refrigerator at any point of time? Or have you guys have seen your family member, your parents, your elder brother or sister who have bought the refrigerator, fridge? Have you guys have seen that? Yes. Very simple example. In everyone's house, fridge is there, refrigerator is there. So I am a company. Let's say I am Vijay Sales. Have you heard about Vijay Sales? Vijay Sales, it's an electronic mart, electronic showroom. Vijay Sales has sold a refrigerator. And when Vijay Sales sold a refrigerator, this refrigerator comes with a installation service. Right? So friends, Vijay Sales sold the refrigerator. Okay. He has delivered the refrigerator. Now refrigerator came to your house. Okay. And it was delivered on 29th of March. Financial year ending on 31st of March. Vijay Sales provides refrigerators, sale of refrigerator and installation service, which is there with the refrigerator. This installation was given on 4th of April. My question to you is whether the delivery of refrigerator and installation service, whether these two items are distinct, whether these goods and services are distinct or not distinct. If it is not distinct, it is a single performance obligation. If it is a distinct, different, separate, then it is a separate performance obligation, means two performance obligation. What's your view? It is a distinct. Why? Whether at a goods or service level, you need to check whether the customer will get the benefit of that refrigerator at his own or with the available of readily available resources. Means अगर मैं रेफ्रिजरेटर लेकर आया, ठीक है, मुझे इंस्टॉलेशन नहीं भी मिली विजय सेल से, तो क्या मैं रेफ्रिजरेटर खुद ऑन करके प्लग एंड प्ले कर सकता हूं? यस और नो? आंसर इज यस. In my life, I have purchased refrigerator 3 times. When I was kid, I have not purchased, my parents have purchased. But with my earning, I have purchased refrigerator 3 times. And let me tell you, before the mechanic comes, we always used to plug and play the refrigerator at our own, right? It is as simple as that. It is as simple as that. Correct? Or even though if you cannot do that, you can call any mechanic from your readily available resources. You can call any mechanic and he will get it installed. You have to do nothing. Is that clear? So friends, at a goods or service level, if the customer can get the benefit of goods and services at their own or with the help of readily available resources, that goods and services will be considered as a distinct, different, means separate performance obligation. So my dear friends, in that case, Vijay Sales can recognize the revenue to the extent of refrigerator, right? Because this installation and refrigerator is not interrelated activity or kind of a highly integrated activity. Okay. I hope you guys are getting it clear. Friends, second example. Amazon. So not Amazon, Reliance Digital. Reliance Digital dealer sells a refrigerator. Okay. It also provides a delivery service on the request of the customer. Okay. So he is selling refrigerator and it also provides the delivery service. Says that, okay, I will get it delivered on your house as well. Right. And the customer may arrange delivery at their own as well. Right. The customer can also take the washing machine in their car or in some other sources, and the customer can carry this washing machine to their residence. Okay. So in this case, again, sale of refrigerator or washing machine and this delivery service, these two are distinct, these two are different, these two are separate. Okay. These two are separate. So when Reliance Digital sold the refrigerator, and it says that, the delivery will happen after 2 days. If you want me to deliver, I don't have the people right now because there is a heavy rush of demands. We have order in pipeline, and I will sell you after I will deliver it to you after 2 days. So whether Reliance Digital will recognize the revenue once it is delivered after 2 days, or Reliance Digital will recognize the revenue for sale of refrigerator or washing machine today itself, because the sale and delivery are two separate performance obligation, two distinct performance obligation, right? Amazon, you have purchased washing machine through Amazon, right? So Amazon has to deliver the washing machine to you. Friends, in this case, tell me whether Amazon will recognize the revenue once washing machine is delivered, or Amazon will recognize the revenue once washing machine was ordered. You have opened the Amazon app, you have ordered the washing machine, you are not clear from which seller, from which part of the country this washing machine will come. I have purchased washing machine 7 years back from Amazon. It came from Pune. I am living in Delhi, right? So friends, the washing machine cannot be used by the customer at his own, or with the help of readily available resources. It cannot be delivered. Because the customer is not able to aware from which vendor, from which godown of Amazon this will come, right? So in this case, it will be considered as a single performance obligation, and Amazon will recognize the revenue only when it is getting delivered. Right? Understood? Clear? I hope you guys are clear on this aspect. I hope you guys are clear. Okay. So friends, when goods and services are considered as distinct at a good or service level, this goods and services will be considered as distinct if the customer can get the benefit of the goods and services at their own, or with the help of readily available resources, right? At goods or service level. Friends, the standard has given you two two steps, two aspects to evaluate. Number one, at goods or service level. Number two, at contract level. And at contract level. So one at goods and services level, number two at contract level. At contract level. Sir, what does it mean? So let me explain that. At contract level. And at goods and services level and at contract level. Sir, couldn't understand what is meant by at contract level. Okay. Friends, for example, you need to check whether the goods and services are separately identifiable in the contract. Whether goods and services are separately identifiable in the contract. Sir, what is the meaning of separately identifiable in the contract? Standard says that while we agree that the goods and services are distinct at their own, at the individual level, the goods and services are distinct. Means the customer can get the benefit of goods and services at their own or with the help of readily available resources, right? But whether these goods and services are separately identifiable in the contract means whether within the contract it is also considered as a distinct. So let me take an example. Let's say I am a contractor, okay? And Pooja has given me a contract to construct her house, okay? And she wants me to construct 3-story building, right? उनको 3 माले का हाउस बनाना है, 3 फ्लोर का हाउस बनाना है. So I started constructing. I have done this excavation, digging, put the linters, foundation, earthing work. I have also constructed kind of a till the first floor. And I have to construct 2 more floors, right? Question number 1. Whether these goods and services are distinct at their own, I mean to say, let's say after constructing my first floor, after constructing the first floor, I have stopped working on the Pooja's contract. मैंने काम करना बंद कर दिया, being a contractor. So can Pooja get this house completed from the other contractors? Can Pooja get this house completed from the other contractors? Yes or no, friends? ये हाउस क्या पूजा दूसरे कॉन्ट्रैक्टर से कंप्लीट करा सकती है, नहीं करा सकती? करा सकती है. Yes. Yes. Friends, whether the other contractor need to demolish the entire first floor and everything and start constructing from the scratch one, from the day one, from the scratch, or they have to carry it forward from where myself has completed and myself has stopped working. So they have to take it forward from where I have stopped working, right? From where I have stopped working. So friends, in this case, considering this as a situation, goods and services, at a goods and services level, at my level, I'm a contractor, I'm a construction agency, I'm a revenue earner. So these goods and services are distinct. The moment I'll stop working, the customer will be able to get this finish up, get it completed with the other available resources, okay? Or the customer can get the benefit at their own. But within the context of the contract, at a goods and service level, it is okay. But within context of the contract, whether these goods and services are separately identifiable in the contract, I mean to say, standard says that the goods and services are considered as separately identified in the contract if there should not be a significant integration, there should not be a significant modification or customization, or the activity should not be highly interrelated or interdependent. Means within the contract, if you are providing some goods or services, those goods and services should not be highly interrelated, highly integrated, highly interdependent, or it is significantly customized or modified. It should not be the case. If this should not be the case, In that case, these goods and services are considered as a separately identifiable. But in case of construction of a house, don't you think the entire construction activity is highly integrated, highly interrelated? Because I know where the wirings are going on. I know how this, plumbing work has been done. I know which pipe is going into which direction. I know how I have done the seepage, how I have done the earthing. Don't you think this entire construction activity from the context of the contract, right? So Pooja, as a customer expectation is get the construction of the house as a single performance obligation. Yeah. Don't you think this entire activity is highly integrated, highly interrelated, highly customized and modified? Correct? Correct? So friends, in this case, while at a goods and service level, it could be distinct, but at a contract level, it is not distinct. At a contract level, it is not distinct, right? Why? Because the activities are highly integrated, highly interrelated, or highly modified or customized. Are you getting me? So in this case, this will be considered as the entire construction of house will be considered as a single performance obligation, right? So friends, whether goods and services are distinct or not distinct, you have to see from the goods and services level as well as from the contract level you have to see. Okay. I'll discuss more examples and then it will be clear, 100% clear to you guys, right? So this is more kind of a theory. So you need to check whether goods and services are distinct or not. You need to check at a goods and service level and at a contract level, right? The goods and services are considered as separately identifiable in the contract if there should not be a significant integration, there should not be a significant modification, the activity should not be highly interrelated. And this is not and, this is or. Okay. We'll discuss some examples, the examples which I have discussed, right? So let me put the examples for you guys here. Reliance Digital Dealer example I have taken. Sale of refrigerator, Amazon, we have discussed. It is a single performance obligation, right? Okay. So let's discuss one more example from Flipkart. Flipkart is selling parts for computer. Okay. And Flipkart has delivered these parts. So Abracase has ordered a laptop from Flipkart. Okay. So instead of sending that laptop, Flipkart has sent the unassembled parts, monitor, CPU. So for computer, Flipkart has sent motherboard, keyboard. Flipkart has sent multiple unassembled part. Okay. And Flipkart has delivered the parts. Of course, Abracase has not ordered these parts. Abracase has ordered the computer. So now Flipkart will send the engineer, and that engineer will assemble these parts, and engineer will make it as a computer in Abracase house, in Abracase residence. Right? Friends, Abracase has ordered a computer, but Flipkart has delivered the parts of the computer, and now Flipkart has to get the assembling done, right? And the engineer will come and do the assembling. Now my question to all of you is, whether Flipkart will recognize the revenue only when the assembling will get completed, or Flipkart will recognize the revenue only when the parts will get delivered. When Flipkart will recognize the revenue? Tell me. Nisha is saying after assembling. Anila is saying assembling done. Abracase is saying after assembling. Why? You are talking from common sense, or you are fitting it into the two aspect which is given in the standard? What's your view? Abracase is saying it is not beneficial to me until and unless it will get assembled, because my intent was not to have parts. My intent was to have a computer. Anila is saying I can't use it without assembly. And Nisha is saying significant integration is required, right? And that is why it is a single performance obligation within the context of the contract. Okay. and it is a Flipkart responsibility to assemble. You all are right. First of all, whether these goods and services are distinct at their own. For example, whether Abrakesh can assemble at his own, answer is no. Normally, the customer cannot assemble at his own, and if the customer will not done the assembling properly, probably the warranty will also expire. Okay, so this is not a significant this assembling of computer. This is not a simple task. Okay, so the customer cannot make it their own. Probably the customer can get it done through the available resources. Probably Uppercase can call some engineer, can call some computer engineer, or from his surroundings, and probably he'll get it assembled. So might be he will get it assembled, might be, but he will not take a chance. Why? Because if he will get it done through a local person, might be the warranty will get expired. Okay, right? Number two, even though if it can be done, even though, but within the context of the contract, within the contract, whether the contract is to provide, the parts, or the contract was to provide computer. The contract was to provide computer, right? And this entire activity is highly integrated, highly modified and customized, right? It is highly integrated, and each part is interrelated with each other, right? The keyboard, the motherboard, the CPU, each and every part is interrelated to each other. So it requires high degree of customization, modification, interdependency, interrelated, and hence this will not be considered as a separately identifiable. So these multiple parts will not be considered as a separately identifiable. I mean to say, the sale of parts, delivery, and assembling will not be considered as a separately identifiable within the context of the contract, and hence it is a single performance obligation. Flipkart will recognize the revenue when assembling will get completed. Okay. Pooja, customized means one has to assemble. One has to do the assembling. Okay. Customized does not mean not from that perspective that I am getting it I am getting it completed in a different way. Okay. So it is not actually customized that way, right? So it is interrelated and interdependent largely. So it is a single performance obligation. It is a single performance obligation. I hope now you guys have understood it very well. Yeah. Yes. Now, let me ask you this question. Very good example. And a lot of examples are based on this example in the ICAI study material. A lot of examples are based on this example. Lot of examples are on the basis of this example. Software company examples. Software company selling a Axis software to a client. Software company selling a Axis software. Axis is the name of the software to a client. It also provides installation service, right? The installation service is a normal service, and this can be done by any software engineer. It is not a very, it does not require high degree of excellence. It is a very simple kind of installation service, like you guys are installing your washing machine and refrigerators. Okay. And this can be done by any software engineer. The software company also sells goods on a model where client can take only software, only installation, or both from the company. How many performance obligations are there in this case? How many performance obligations are there in this case? First question. Whether these goods and services are distinct at their own. I mean to say, if the customer will get this software, right? Whether the customer will get the installation done at his own or from the readily available resources. Answer is yes. So at a goods and service level, yes, it is a distinct goods and service. From the context of the contract, right? Whether this installation service is a highly integrated, interdependent or interrelated service. It's a very normal service. It is written in the question. It does not require any high degree of excellence or high degree of expertise, right? It's a normal service and can be done by any engineer. Okay, can be done by any engineer. And even though it is written that the company business model is also like that, the company is also providing even installation service separately, right? So the customer can only purchase software, only purchase installation, or purchase both from this company, right? So the company is also only selling software as well. So it means the goods and services are distinct at their own, as well as goods and services are distinct in the context of the contract as well, right? So there are two performance obligation in this case, as both of the below conditions are satisfied. What are those two conditions? Analysis. Condition number 1, goods and services are distinct at their own, means individually. So instead of at their own, let me write goods and services distinct individually, as well as goods and services are distinct in the context of the contract as well, right? As well. So there are two performance obligations in this case. What are those two performance obligation? The two performance obligation is sale of software and installation service. For example, your sale of software is a PO1, installation service is PO2. If the software was sold on 25th of March and the installation service was given on 5th of April, so revenue is recognized on 25th March for sale of software and revenue is recognized on 5th April for installation service, right? Now I'll have to make it complex. Now I need to make it complex. Let me reframe this example. Software company is selling an excess software to a client. Again, it also provides installation service. The installation service requires high degree of customization and it is done by this company. So this installation requires high degree of customization, means this installation requires high degree of expertise. Something needs to be fixed up, something needs to be pulled out, right? So it requires lot of expertise. And it is done by this company only, as this needs high amount of knowledge about this software as well. The client always buy the product and installation from this company only. How many performance obligation are there in this case? In real world, let me give you a real life example. I have a mixie, you understand, mixer, juicer, grinder, right? And that mixie belongs to IFB, right? And I purchased that mixie from Singapore. So there was a fault in that mixie. That mixie. When we started using that mixie, so after 1 year, we found some fault. There was a problem. So I called my local engineer, my local mechanic who is dealing into this mixie, air condition, refrigerator, washing machine. He told that, sir, I will not be able to solve this issue because, you know, you have to call the engineer from the company itself, right? Then I went to the other guy, okay, and it was a big electronic repair center. And I went there and he told, sir, you have to take this to the company. And one part has to get replaced and it will be available in the company only. All right. So friends, it means for the repair of that product or for the installation, for the repair of that product, the repair requires a high degree of expertise, high degree of excellence, high degree of customization, high degree of knowledge, right? And high degree of knowledge of that product, right? And it is available only to that company itself. Okay, not available to everyone. So it means in this case, only selling this software will not help the buyer, will not help the customer, right? So installation also has to be done. Installation also has to be done. It is also required to be done. So it is also written that the client always buy the product and installation from this company only. How many performance obligation are in this case? So in this case, there is a single performance obligation because this installation will require high degree of, customization, high degree of knowledge, and hence it is a single performance obligation in the context of the contract as well. Okay. There are no separately identifiable goods and services in this contract, and it is one contract, one single performance obligation. What? Which is sale of software and providing the installation. So in this case, there is a single performance obligation. And what we are required to do when this company will recognize the revenue? Tell me, when this company will recognize the revenue, assuming the same situation, the revenue for entire contract will get recognized on the 5th of April. Fine, perfect. Yes or no? Perfect. Friends, are you able to understood it very well? Are you able to understood it properly? Yes. Any doubt? Any question? Let me see the other guys also, other participants also. So Hemant, Devang, Kishan, Hardik. Okay. Hemant, Devang, Kishan, Hardik. Are you okay? Any question, any doubt? Okay, good. So let me. So Abrikesh is asking why combo offer is not another performance obligation. Abrikesh, your question is, so Abrikesh, either, let me give you a real life situation. Let's say I am giving a combo offer. Let's say I'm selling you software and I'm selling you installation. I'm giving you combo, right? I have sold the software on 31st March itself. But installation I am providing on 2nd of April. Again, I'm asking you the same question. That should I recognize the revenue of sale of software, or I should recognize this revenue of sale of software only when I'll complete the installation? In that case, you have to see whether these two are separate performance obligation while the offer is combo offer, but whether it is a separate performance obligation or it is a multiple performance obligation. It is only written in the question, uppercase, that this company, the business model of the company is company provides only software, company provides only installation, or company provides both also. मतलब कंपनी इज ओके। अगर आपका दिल है कि सिर्फ सॉफ्टवेयर खरीदना है, कंपनी कहती है ओके। आप कहते हो नहीं नहीं, मुझे तो सिर्फ आपसे इंस्टॉलेशन करानी है, कंपनी कहती है हम इंस्टॉलेशन भी करते हैं। आप जाकर कहते हो नहीं मुझे तो दोनों चाहिए, कंपनी कहती है दोनों ले लो। आर यू गेटिंग मी? आई एम टीचिंग sustainability and financial reporting. Student come and ask, sir, I only want financial reporting. I said, okay. Another student come and ask, sir, I only want sustainability. I said, okay. Another student come and ask, sir, can I have both? I said, okay. Are you getting me? But my dear friend, sustainability and financial reporting both are the separate performance obligation. Both are the separate paper, considering separate marks. Okay, clear? Okay, perfect. Fantastic. Now, friends, it's 8:20 now. So let's have a 10 minutes break and we will start at 8:31. Okay. And after break, we will solve so many illustration from ICAI study material. Okay. So friends, we understood how to evaluate the performance obligation. Performance obligation will be the separate performance obligation, considered as a separate performance obligation when it will be distinct. What will be distinct? Goods or services will be distinct, right? There could be some individual goods and services, or there could be a series of goods and services, but the underlying principle is it has to be distinct, means the other party can get the benefit out of it, okay, either at their own or with the readily available resources. And the second aspect is you need to check whether goods and services are distinct, one, from individually from the context of the goods and services. Second, from the context of the contract. Goods and services will be considered as a distinct from the context of the contract also if it does not require any significant integration, interrelation, interdependency, or it does not require any significant modification or customization, right? For in example, in case of construction activity, it requires significant modification, customization, interdependency, interrelation, etc., etc. Okay. So if distinct goods or services are in a series like newspaper, security guard, okay, big basket is delivering milk on a daily basis. So it represents a performance obligation satisfied over time, right? It's satisfied over time. So same method of progress is used to measure the transfer of each distinct goods or service in the series of customer, right? So even though if the newspaper vendor has delivered, for example, he has started delivering the newspaper on, for example, 14th of March to a customer. So he will raise the invoice on 14th of April, but while closing the books of accounts on 31st March, he can recognize the revenue for 18 days because each newspaper is a distinct good or service. Okay. Performance obligation, example number 1. So we have discussed this example number 1. While quickly, let's discuss again. Entity enters into a contract to manufacture and install customized equipment and provide maintenance service for a 5-year period. Entity enters into a contract to manufacture and install. So manufacturing of equipment and installation of customized equipment and provide maintenance service for a 5-year period. Installation service includes the integration of multiple pieces of equipment at the customer's facility in order for the equipment to operate as a single unit. उस इक्विपमेंट को ऑपरेट करने के लिए इंस्टॉलेशन करानी पड़ेगी, अदरवाइज ऑपरेट नहीं हो पाएगा. And this installation requires a significant high degree of integration of multiple components, right? Equipment cannot operate without installation. Entity sells equipment and installation service together and does not sell installation separately. Other vendor can provide the installation service, while entity always sell it as a combo. Entity always sell it together, does not sell installation separately, but other vendor also provide the installation. The maintenance services are sold separately. Determine how many performance obligation are there in this case. Maintenance services are sold separately. Tell me how many. Tell me how many services are there. How many performance obligation are there in this case? Abrakesh is saying 2, Pooja is saying 3, Nisha is saying 2. What about others? Lenovo, I don't know who is the name of that student. So Lenovo is saying 3. Friends, Tushar is saying 3. Friends, from the at a individual level, at a goods and services level, right? First of all, step number 1, at a goods and services level. So while there are 3 aspects, equipment, installation, and maintenance. Goods cannot be used without installation, but customer can obtain installation from another source, right? So the equipment, when equipment is sold, it cannot be operated without installation, but installation can be done from the other vendors. Installation can be provided by multiple vendors. So service is distinct. Maintenance service is a distinct function. Okay. It's a distinct service. So from the individual level, at a goods and services level, there are 3 performance obligations. But you need to see from the context of the contract also. From the context of the contract, equipment and installation are highly interrelated. Significant customization is required during installation. Good is not distinct on its own because it must be combined with the installation, right? So friends, goods, I mean to say equipment and installation are single performance obligation in the context of the contract. It requires high degree of integration and interrelation. Maintenance service is not highly interrelated. No integration, modification, customization required. Services are individually distinct. So in this example, there are 2 performance obligations, equipment and installation, because they are not distinct within the context of the contract, and maintenance services, right? So not 3, it is 2 performance obligation. How many participants have told 2 performance obligation? They must have this context of the contract in mind. Hemant, what is your view? So Abrikesh told 2 in the context of the contract 2. Yes. Okay. So you have to see both. You have to see both because it is and. Yes. A construction services company enters into a contract with the customer. Illustration number 10. Friends, illustration number 10. Time is 8:38 now. A construction service company enters into a contract with a customer to build a water purification plant. The company is responsible for all aspects of the plant. The company is responsible for all aspects of the plant, including overall project management, engineering, design services, site preparation, physical construction of the plant, procurement of pumps and equipment for measuring and testing, flow volumes and water quality, and the integration of all components. Determine whether the company has a single performance obligation or multiple performance obligation under the contract. Whether the company has a single performance obligation or a multiple performance obligation. Tell me why. Why? Friends, might be the procurement of pump could be a separate performance obligation. The company, the customer could have procured the pumps from some outside vendors, right? The company provides so many services. The company is giving so many services. So at a goods and services level, it could be multiple performance obligation. But at a contract level, if you see from the context of the contract, as a customer, you need a water purification plant. And this entire contract needs a high degree of interdependency, interrelation, integration. This requires high degree of integration, right? Right from the project planning, then procurement, then your construction, integration, then your testing. It entire thing required a high degree of integration and interrelation, right? This requires a high degree of interdependency, and hence from the context of the contract, it is a single performance obligation. It is not a multiple performance obligation, right? The customer need a single asset, not the bits and pieces of those assets. So determining whether a good or service represent a performance obligation on its own or is required to be aggregated with other goods or services can have a significant impact on the timing of revenue recognition. So now you guys have understood that single performance obligation, multiple performance obligation, how it is impacted. I have taken so many examples. 31st March से पहले, 31st March के बाद. So now you guys have understood. Yes or no? समझ में आ चुका है ना? Yeah? Okay. So it depends whether it is a single performance obligation or it is a multiple performance obligation. It depends at the timing of revenue recognition. It depends means it impacts, not depend, it impact. In order to determine how many performance obligations are present in the contract, the company applies the guidance above, right? while the customer may be able to benefit from each promised goods or services on its own. You remember I have taken the example of construction of Pooja's house, where I have left the work because Pooja has not given me the payment properly. So I have left the construction in between. Yeah. So I left the construction in between. So now Pooja will get the construction completed from other vendors, but within the context of the contract, this entire construction activity is highly integrated, highly interdependent, highly interrelated. Okay. And hence, within the context of the contract, it will be considered as a single performance obligation, not the multiple performance obligation. Okay. So while the customer may be able to get the benefit from each promised goods or services on its own or together with other readily available resources that do not appear to be separately identifiable within the context of the contract. That is, the promised goods and services are subject to significant integration and as a result will be treated as a single performance obligation. This is consistent with the view that the customer is primarily interested in acquiring a single asset, which is water purification plant, rather than a collection of related component and services. Okay. So friends, we have covered illustration number 10. Now coming to illustration number 11. A real life example from the telecom world, from the telecom companies. Yes, Ayush, you are absolutely right. In case of construction of water purification plant, you will recognize 100% revenue once the construction will get over. Okay. Illustration number 11. An entity provides broadband service. Bharti Airtel provides broadband service to its customer along with the voice call service. So they are providing broadband data services and voice call services. Customer buys modem from the entity. Modem, you understand now? Customer buys modem from the entity, okay, from company. However, so the company is selling the modem. The company is selling the modem. However, customer can also get the connection from the entity and the modem from any other vendor, right? So Bharti Airtel, I am the customer. I want to get this broadband from Bharti Airtel. So Bharti Airtel says that, see, you have two options. One, you can purchase the modem from me, okay, and I'll provide you this broadband facility. Second, you can purchase the modem from the market. There are so many, companies who are selling modem, for example, Nokia, Huawei. So if you want, you can get this from the market, right? And I will only provide the broadband facility. I will only provide the broadband facility. Okay. So the installation activity requires limited effort and the cost involved is almost insignificant. And the installation is negligible. It hardly require any effort and no cost is involved in it is insignificant. So installation is nothing. It has various plans where it provide either broadband service or voice call service or both, right? So nowadays what happens if you go to Bharti Airtel broadband facility, so they are providing modem, they are providing broadband facility, and they are also providing a telephone number for a connection. They are also providing a number, okay, for voice call. So what they are providing modem, either you can purchase from them or purchase from outside. Number two, broadband facility they are providing. Number three, they are providing voice call service. Okay. So it has various plans where either broadband or voice call or both. Are the performance obligation under the contract distinct? First of all, my question is, how many performance obligation are there, Pooja? Vignesh. Vignesh is saying 2, Anila, Pooja, Abrikes, everyone is saying 3. Nisha is saying 1 performance obligation. Okay. So we have all set of students 1, 2, and 3 who are saying either 1, 2, 3. Hemant, what about you? Is it 1 performance obligation, 2 performance obligation, 3 performance obligation? Any students wants to get him or her corrected? Ginny is saying 3 performance obligation. Friends, let's think about this. First of all, modem. The company is selling modem. Airtel is selling modem, right? And it is available in the market also. If the customer does not wants to purchase the modem from Airtel, it can purchase from outside market also. Whether this modem is a performance obligation or modem is not a performance obligation. Tell me. Whether the modem is a separate performance obligation or modem is not a separate performance obligation. Whether voice call services is a separate performance obligation or not a separate performance obligation. Whether broadband service is a separate performance obligation or not a separate performance obligation. Is it? First of all, ask from the context of the individual goods and services, whether these three are the individual goods and services or not. Whether these three are the individual goods and services or not. The broadband services is an individual services, modem is an individual goods, and voice call services is an individual services. If the customer is availing broadband, even though customer will not want to avail voice call, it is okay. Right? It is okay. The customer can purchase the modem from the outside and the customer can get the broadband services, right? And the company is also selling modem. Company is also only providing the broadband, right? Number two, from the context of the contract. Number two, from the context of the contract. Whether from the context of the contract, whether modem, broadband, and voice call, whether these three are integrated, interrelated? Answer is no. So giving the broadband connection to the modem, whether it requires high degree of integration, high degree of customization, modification? Answer is no. Whether voice call and broadband is interdependent, interrelated? Answer is no. So from the individually, from the context of goods and services individually, as well as from the context of the contract, these goods and services are distinct. These are the separate performance obligation, right? So you can see what it is written. For broadband and voice call services, broadband and voice services are separately identifiable from other promises as company has various plans to provide the two services separately. These two services are not interdependent or interrelated. Also, the customer can benefit on its own from the services received. From the sale of modem, customer can either buy product from entity or third party. No significant customization or modification is required for selling product. Based on the evaluation, we can say that there are three separate performance obligations: broadband service, voice call service, and modem, right? How many of you are not clear on this? How many of you? How many of you have a doubt? So Hemant is also saying all three are separate performance obligation. Thank you, Hemant. What about Hardik? What about Hardik? What about Kishan and Devang? Rajat is also saying, yes, sir, there are three performance obligation. Rahul is saying, sir, yes, it is distinct individually as well as within context of the contract. Very good. Talking very technical, Rahul. Very good. Great. Okay. So we have also covered illustration number 11. Illustration number 11, right? Now let's go to the next illustration. And before that, yes, this example. So this is illustration number 15 of ICAI study material. Please read this illustration. I'm giving you 30 seconds and then I will discuss. Please read this illustration. This is illustration number 15 of ICAI study material. Yes. Now let's discuss this. Software company enters into a contract with a customer to provide a perpetual software license. It is a continuous software license to use this software. Software company enters into contract with a customer to provide a perpetual software license. So that is one, providing software, installation service, and 2 years of post-contract customer support. Unspecified future upgrade. You have seen that in some software, in your mobile software, there are some upgrades which are coming, right? So, and 2 years of post-contract customer support, which includes unspecified future upgrades and telephone support. The installation service require the entity to configure certain aspects of the software, but do not significantly modify the software, right? These services do not require specialized knowledge, and other sophisticated software technicians could perform similar service, right? So this installation service does not require specialized knowledge, okay? And other software technicians can perform this, can do this installation. The software does not require the upgrades in telephone support in order for it to remain functional. While if you don't upgrade your mobile software, whether your mobile stop functioning, answer is no. It is required just for the better efficiency, better functioning of the mobile phone, right? So likewise, it says that the software does not require the upgrade in telephone support in order for it to remain the functional. But to utilize it efficiently, of course, these upgrades are required to be entertained. The entity sell the license, installation, and technical support separately, right? Which is future upgrade and telephone support. How many performance obligations are there in the contract? How many performance obligations are there in the contract? How many? Tell me. So performance obligation are software license, installation services, unspecified future upgrade, and telephone support, right? These are the performance obligation. The customer can benefit from the software which is delivered first because it is functional without installation, unspecified future upgrade, and telephone support. Okay. So my dear friends, these are the three performance obligations: software license, installation, and telephone support, which includes future upgrade and the other telephone support. Okay. So you can consider this telephone support as a one performance obligation. Okay. So customer can benefit from the software. Why? Because the customer can get this installed through some other technician also. The customer can benefit from the subsequent installation service, unspecified future upgrade, and telephone support together with the software which it has already obtained. Software company conclude that each good and service is separately identifiable because the installation service, unspecified future upgrade, and telephone support do not significantly modify or customize the software. Additionally, the software and services are not being integrated into the output that the customer has contracted to receive, right? So these are the different performance obligations. Okay. If you will say 4, it is okay. If you will say 3, it is okay. But when you are saying 3, then please write down that we are considering this, telephone support, future upgrade, and telephone support as a updation, and telephone support as a single performance obligation, right? Or you can write 4 performance obligation. Whatever it is, okay. Is that clear? Okay. So friends, before that, let's discuss this example also. Manufacturer enters into a contract with a customer to sell a custom tool and replacement parts manufactured for the custom tool. Manufacturer only sells custom tools and replacement part together, and no other entity sells either product. The customer can use the tool without the replacement parts, but the replacement parts have no use without the custom tool. How many performance obligations are there in the contract? You must have seen when you got the car, Stephanie comes with the car. Yes or no? Stephanie comes with the car. right? So the car can run without Stephanie, but the Stephanie cannot run without car. For using this Stephanie, the tire, the car will be required, right? So friends, in this case also, so the manufacturer is manufacturing the custom tool, and the manufacturer is also giving the replacement parts, okay? And apart from the company, no one else is selling those replacement parts, right? So manufacturer only sells custom tools and replacement parts together, and no other entity sells either product. Even manufacturer sells both together, and this replacement part is not provided by anyone else, right? So within the context of the contract, right, whether it is highly integrated, highly interrelated, answer is no, right? Answer is no. It is highly interdependent, answer is no. Whether customer can get the benefit from the custom tool without the replacement parts, customer can get the benefit, right? So it is single performance obligation or two performance obligation. I mean to say, while the customer is selling the replacement part together, but if the customer has sold the machinery, that custom tool, and the customer has delivered the replacement part after 5 days, and within that, the year end closes, whether the company will able to recognize the revenue or not. The company has delivered only custom tool. The company has not delivered the replacement parts. Friends, in this case, the company will recognize revenue. Why? Because while the company is selling it together, I totally agree, the company is selling it together. No one else is selling, but whether this custom tool can be operated or not, these are not the what should I say? These are not the part which are required immediately to operate. These are the replacement part which will be required in future. Let's say the car dealer is selling you car, okay, and the car dealer is also selling that accessories with the car, okay. And this was really happens with me. Let me tell you, this was really happens with me. I purchased a Skoda car, okay. And when I purchased a Skoda car, there was accessories worth 10,000 rupees. Accessories worth 10,000 rupees and toolkit, which was there in my car. It was not delivered at the time of delivery of the car. Why? Because the showroom told me that, sir, this toolkit was short and this accessory kit was short. So in one of the car, it was not provided, and we have given this kit to the other customer, and we have ordered to the factory, and it will come in the next 1 week, right? So the question is, without those toolkit or accessory, whether my car will not be able to function? Answer is, my car will be able to function. It will be required only in case of a breakdown, right? So, and my toolkit and my car, both these items are not highly interrelated or integrated. Are you getting me? Are you getting me? First of all, from the context, from the context of individual goods and services, the car is different and the toolkit is different and accessory kit is different. From the context of the contract, it is not highly integrated, interrelated, interdependent, and customized, right? And hence, these are not single performance obligation. These are the two different performance obligation. Means the company can recognize the revenue only on the delivery of custom tool or only on the delivery of the car. The company can recognize the revenue. Company should not wait for the delivery of replacement part or for the delivery of toolkit to recognize the revenue of car or machine as well. I hope it is clear. I hope it is clear to all of you. Is it clear, Pooja? Is it clear now? Hemant is saying the company can recognize after delivering the tool. Yes, Hemant, you are right. Yes. So guys, let me see if there is any other question which I need to take from ICAI study material. Otherwise, I'll move on. Just hold on for a minute. I am opening the ICAI study material. Illustration number 15 we have covered. This example we have also covered. Illustration 17. So rest of the illustration I have already captured in my examples. So let me take you through illustration number 19. So let me discuss illustration number 19, okay, which is there on the screen. Illustration number 19. Media Company P Limited. Media Company P Limited offers magazine subscription to the customers. When customers subscribe, they receive a printed copy of the magazine each month and access to the magazine's online content. Determine how many performance obligations the entity have. Media Company P Limited offers magazine subscription to the customers, right? When customers subscribe, they receive a printed copy of the magazine each month, printed copy, and access to the magazine online content also. So one hard copy and soft copy. So they are getting both. Determine how many performance obligation does the entity have. Just apply your mind. Before answering this question, just take a pause for 30 seconds, think about, and then answer. So you need to see whether this printed copy and online content, whether these are two separate performance obligation or these are the single performance obligation. So friends, first of all, from the context of the individual goods and services, from the context of the individual goods and services. So hard copy, when the customer will get the hard copy, whether customer will be able to read the hard copy only when the online content will be available, or customer is able to read the hard copy separately, or when the customer is getting the online content separately. So will the customer be able to read the online content only when the hard copy will be available? Friends, are you getting me what I'm saying? I am asking that you have applied for a subscription with a magazine company, and magazine company told that Abrakesh, I will give you hard copy as well as online. Means soft copy and hard copy, both I'll give you. Now the question is whether these are the two separate performance obligation, or it is a single performance obligation. So you have to check whether these goods and services, hard copy and soft copy, are distinct or not distinct. So first you need to see from the individual capacity, then you need to see from the contract capacity. In the individual capacity, Abrakesh, in the individual capacity, whether these hard copy and soft copy are distinct or not distinct. These are distinct. Why it is not distinct? I'm not able to understand why it is not distinct. It is distinct. Why? Because hard copy has a separate use. It is not like that if the company has delivered you the hard copy and the company has not delivered the soft copy, of course you will be able to read the hard copy separately. If the company has given the soft content but does not deliver the hard copy, you can read the online content as well without having this hard copy. They're not dependent on each other, right? So one can have a benefit, whatever it has been delivered to him. Correct? Now you need to see from the context of the contract. From the context of the contract, whether this hard copy and soft copy is, whether both are interrelated, whether both are interdependent, whether both are integrated, answer is no. These both are into different format. Different format. It is not integrated. It is not interrelated. Right? The formats are different. So friends, Friends, this hard copy and soft copy are two separate performance obligation, right? So P Limited evaluates whether the promises to provide printed copies and online access are separate performance obligation. P determines that the arrangement includes two performance obligation for the following reasons. The printed copies and online access are both capable of being distinct because the customer could use them on their own. Number one. Number two, the printed copies and online access are distinct within the context of the contract because they are different format. So they do not significantly customize or modify each other, nor is there any transformative relationship into a single output. Okay. So these are the two separate performance obligation. Is that clear? Clear or not clear? Clear? Illustration number 20. Please read this illustration number 20. Please read this illustration number 20. Software company K Limited enters into a contract with reseller D, which then sells software products to end users. Okay. So K sold goods to D, D sold to the customers, means the final end users. It's more like a wholesaler. It's more like a wholesaler. And then, so wholesaler, retailer, and then customers. K Limited has a customary business practice of providing free telephone support. K Limited has a customary business practice of providing free telephone support to end users, directly to the end users. Okay. And for example, if you, let's say, you purchase your mobile phone from the distributor or retailer, but in case of any warranty or any fault, you have to go directly to the service center of the companies, right? So likewise, K Limited has a customary business practice of providing free telephone support to end user without involving the retailer or distributor, and both reseller and the customer expect K Limited to continue to provide the support. Even dealer wants that, this company should provide the support, and customer also wants that this company provide the support, right? So what this company is promising, the company is selling the goods, and the company is selling the goods means selling software product, and the company is also providing telephone support. Okay. So determine how many performance obligation does the entity K Limited have. I'm talking about K Limited, not the reseller D. K Limited की कितनी performance obligation है इस केस में? Tell me. So K Limited is selling goods to D only. So K Limited is selling goods to D. So how many performance obligation is there? There are two performance obligation. Number one, K Limited is selling software product to D, and D will sell to the customer. So the moment this software will be sold to the customer will be needing some technical support also in future, right? So this one is sale of software product. The second one is telephone support. This is the second performance obligation. Sir, if this will not be the two performance obligation, and this entire contract, including telephone support, will be the one performance obligation, then what will happen? In that case, the company will not be able to recognize the revenue till the time the company will provide the telephone support. मतलब कंपनी ने प्रोडक्ट तो सेल कर दिया, लेकिन अगर सिंगल परफॉर्मेंस ऑब्लिगेशन होता, कंपनी ने प्रोडक्ट सेल कर दिया, कस्टमर यूज भी कर रहा है प्रोडक्ट, बट कंपनी ने टेलीफोन सपोर्ट की रिक्वायरमेंट ही नहीं पड़ी, कंपनी ने दिया नहीं टेलीफोन सपोर्ट, सो कंपनी विल नॉट बी एबल टू रेवेन्यू. आई एम जस्ट गिविंग यू हाइपोथेटिकल सिनेरियो. So friends, in this case, The company has sold the product, the customer can use the product, right? And now the company is required to provide the telecom support service, right? So this will be treated as a separate performance obligation. There are two performance obligations: sale of software product and sale of support services. Is that clear? Is that clear? Yes or no? हाँ या ना? Yeah. Okay. Yes. Let's go to the next concept in the determination of performance obligation. Friends, how many of you have booked online ticket, flight ticket? How many of you have booked online flight ticket, or you have booked movie ticket? How many of you? मूवी की टिकट तो बुक की होगी, फ्लाइट के टिकट, मूवी के टिकट. ओके, विघ्नेश, पूजा, अब्रकेश, धन्या, ओझा. Yes, you guys have booked. Correct. So friends, when you book the ticket, probably you book the ticket from Make My Trip. You book the ticket from Make My Trip, Yatra, easytrip.com. Correct. Probably movie ticket you booked from bookmyshow.com. Correct. So you booked a flight ticket of Vistara or Air India from Make My Trip. Tell me whether Make My Trip is responsible for flying the aircraft, or Make My Trip is only the facilitator here. You have booked the ticket of what is the recent movie? What is the latest movie? Anyone who can tell me the latest Hindi movie? The name of latest Hindi movie? Istri 2. Have you watched Istri 2? Yeah. So you have booked the ticket of Istri 2 on Book My Show. Okay. Whether Book My Show is responsible for responsible for telecasting that movie Istri 2, or PVR will do. PVR will do. Book My Show is only acting as a facilitator. Book My Show has given a platform where the customer can book the tickets, and PVR is responsible for performing the obligation, right? And there, Vistara or Air India is responsible for performing the obligation. Make My Trip is only acting as a facilitator, and for that, Book My Show or Make My Trip, they are charging convenience fee. Have you seen the convenience fee? Make My Trip is charging 500 or 350 rupees as a convenience fee. Correct? And if you have bought the movie tickets from Book My Show, you must have paid 75 or 80 rupees extra on the ticket. Yes? Service charge plus GST. So these guys who are providing you the tickets, but these guys are not directly providing the performance obligation. So from applying the common sense, whether these guys are acting as a principal or these guys are acting as an agent. Yes. Monica, Dhanya, Anila, Pooja, Oja, Abrakesh, Nisha, Tushar. Yes. So these guys are acting as an agent. But if I'm talking about PVR, Air India, Vistara, whether these guys are acting as a principal or as an agent. These guys are the service provider. These are the principal. These are acting as a principal. So friends, it is very important to identify who is a principal and who is an agent. Why? Because standard says that if a party is acting as a principal, that party has to recognize the gross revenue in the books of accounts. Taking an example, You have booked a ticket of Vistara airline from Make My Trip for rupees 10,000. Make My Trip has collected 10,000 rupees from you along with 350 rupees as a convenience fee, right? So you have paid 10,350 rupees to Make My Trip. Okay. Now, this 10,000 rupees for ticket price and 350 rupees the service charge which Make My Trip has collected from the customer. And 10,000, Make My Trip has collected 10,000 also, but it belongs to Vistara. So friends, in this case, Vistara will recognize a revenue of 10,000 rupees as a revenue, gross revenue. Okay. And Make My Trip will not recognize 10,350 as a revenue and 10,000 rupee as a cost. No. So Make My Trip will only recognize the revenue to the extent of commission, to the extent of convenience fee, to the extent of 350 rupees. So friend, standard says that if you are acting as a principal, you have to recognize gross revenue. If you are acting as an agent, you have to recognize net revenue, net commission, net revenue. Net revenue means 10,350 minus 10,000, which comes out at 350 rupees, right? So who is a principal? Principal is a party who provides goods or services itself. Agent is a party who arranges for another party to provide for goods and services, right? Agent is a party who provide goods and services to the other party. An entity is a principal if the entity controls a promised goods or services before it transfer to a customer. When you will say that the entity is a principal, if the entity controls the goods and services before it transfer to customer, whether Make My Trip controls, tomorrow Vistara decided that, I will not fly this aircraft, whether Make My Trip controls. Yeah. Answer is no, Make My Trip does not control. Vistara controls, airline controls. If PVR decided, no, I'll not telecast tomorrow's show, whether Book My Show controls? Answer is no. PVR controls. So an entity is a principal if the entity controls the goods and services before it transfer to a customer, right? An entity may not be a principal if it obtains a legal title only momentarily before it is transferred to a customer. So this is not important. Now, friends, there are some indicator which is given to in the standard that who will be considered as a principal and who will be the agent, right? So I mean to say, when you can say that, yes, this entity is controlling the goods and services before it is getting transferred to the customer, right? So there are some indicator which indicates that, yes, you control or you do not control. It says that an entity is considered as that the entity is controlling the goods and services if the entity is primarily responsible for fulfilling the promise. The entity is primarily responsible for fulfilling the promise. Okay. Who is responsible for fulfilling the promise? In my case, Book My Show or PVR? PVR. Make My Trip or Vistara? Vistara, right? So that entity will be considered as controlling the goods and services. Condition number 1, when the entity is primarily responsible for fulfilling the promise. Promise to fly the people. Promise to telecast the movie. Entity has the inventory risk. Who is having the inventory risk? Whether Make My Trip or Vistara. Let's say the Vistara aircraft is, let's say, 186-seater aircraft. And only 50 tickets have been sold. 136 seats are still vacant. So whether Make My Trip has a loss of 136 tickets or Vistara has a loss of 136 seats. Vistara. So entity has a inventory risk. Entity has a discretion in establishing prices. Who has a discretion in establishing prices? Who will decide prices? Vistara or Make My Trip? Vistara. Vistara, right? So friends, an entity is considered as a principal if that entity is controlling the goods and services before it transfer to the customer. When it is said to the controlling the goods and services, when 3 conditions are there, you need to check those 3 conditions. Always a principal has a primary responsibility of fulfilling the performance obligation. Entity, that principal has a inventory risk and the principal has a discretion of establishing prices. Okay. Now I'm giving you a situation. Make My Trip has contracted with Vistara Airline that, I want to purchase your all the tickets, all the tickets for all the tickets for Delhi Mumbai, all the tickets for Delhi Mumbai. Okay. So let's say on a particular day. So there was a cricket match in Mumbai, and there are 5 flights which are running from Delhi to Mumbai. 5 flights which are running from Delhi to Mumbai. And Make My Trip has purchased all the tickets from Delhi to Mumbai. My question to you guys is, in this case, whether Make My Trip is acting as an agent or Make My Trip is acting as a principal. Make My Trip is acting as an agent or Make My Trip is acting as a principal. Who is having an inventory risk? Vistara got the money because Make My Trip has purchased. Vistara got the money. Okay. But the question is, if Make My Trip will not be able to sell this entire tickets, then who will bear the loss? Of course, Make My Trip will bear the loss. Make My Trip will bear the loss, right? So my dear friends, who has the inventory risk? Make My Trip has an inventory risk. Make My Trip has an inventory risk. My dear friends, who has a discretion in establishing prices? Why Make My Trip has purchased the entire ticket from Delhi to Mumbai, and Make My Trip was aware that yes, I will have to incur some losses also. So Make My Trip will also charge premium, right? So Make My Trip will also charge premium. So friends, in this case, the inventory risk lies with the Make My Trip. The price discretion lies with the Make My Trip. But the only thing is, this flight has to flown by Vistara, not Make My Trip. So friends, this is not all of the condition. This is the condition where you need to see who has the inventory risk, who has the price risk, who has the inventory risk, and who is maintaining to perform the obligation, right? So this is not all of the condition needs to be satisfied. This could be one or more of the condition needs to be satisfied. Is that clear? So in this case, Make My Trip will act as a principal, not as an agent. So whatever revenue Make My Trip will collect, Make My Trip will show the entire revenue, and whatever Make My Trip has paid to Vistara, it has to shown as a cost. Okay. What about Vistara? Whatever Vistara has collected from Make My Trip, Vistara will also show as a revenue, right? Because Vistara is one who is primarily responsible for fulfilling the promise. Okay. Is that clear? So there were 2 contracts, one between Vistara to Make My Trip, second between Make My Trip to customer. Is that clear? So if it is a principal, gross amount, if it is an agent, net amount. Okay. Now friends, let's discuss illustration number 26. Illustration number 26. Illustration number 26. An entity negotiates with major airlines to purchase tickets at reduced rates compared with the price of tickets sold directly by the airlines to the public. An entity negotiates with major airlines to purchase ticket at reduced rates compared with the price of tickets sold directly by the airline to the public. I will call this entity as a Make My Trip. And with major airline, I'll call it as a Vistara. So Make My Trip negotiate with Vistara to purchase ticket at reduced rates because Make My Trip is buying in bulk, okay, with the price of ticket sold directly by Vistara to the public. So Vistara is selling at 10,000. Make My Trip has done the bulk buying and Make My Trip has bought at 8,000. The entity agrees to buy a specific number of tickets and will pay for those tickets even if it is not able to resell them, right? The reduced rate paid by the entity for each ticket purchased is negotiated and agreed in advance. The reduced rate paid by the entity for each ticket purchased is negotiated and agreed in advance, okay? So they have bought at a reduced rates. The entity determine the price. Make My Trip determine the price at which the airline ticket will be sold to its customers. So who has a price risk? Make My Trip. Who has inventory risk? Make My Trip. The entity sells the tickets and collect the consideration from customers when tickets are sold. And therefore, there is no credit risk. Okay. So collection is there. The entity also assists the customer. The entity also assists the customer in resolving complaints. Make My Trip also assists the customer in resolving complaints with the service provided by the airlines. However, each airline, Vistara is responsible for fulfilling obligation associated with the ticket, including remedies for a customer to a dissatisfaction with the service. So flight तो विस्तारा ही उड़ाएगा ना, Make My Trip तो नहीं उड़ा सकता, right? So flight की जो obligation हो तो वो तो विस्तारा की है ना, वो तो सर्विस विस्तारा ही देगा. बट इन्वेंट्री रिस्क, प्राइस रिस्क वो किसका है? वो Make My Trip का है. Determine whether Make My Trip is a principal or an agent in this case. I got the answer only from the 3 participants. What about others? Anila is saying Make My Trip is agent. Why, Anila? Why you are saying it is an agent? So the price risk belongs to Make My Trip. The inventory risk belongs to Make My Trip. So Make My Trip is finalizing the prices, determining the prices. And even if Make My Trip is not able to sell the tickets, the loss belongs to Make My Trip only. So friends, in this case, Make My Trip will act as a principal, not as an agent in this case, right? So Make My Trip has to recognize gross revenue to determine whether the entity's performance obligation is to provide the specified goods or services itself. That is, whether the entity is a principal or arranging for another party to provide those goods and services. That is, whether the entity is an agent. The entity considers the nature of its promise. The entity determines that its promise is to provide the customer with a ticket, which provides the right to fly on the specified flight or another flight if the specified flight is changed or cancelled. The entity considers the following indicator for assessment as a principal or agent under the contract with the customers. The entity is primarily responsible for fulfilling the contract, which is providing the right to fly. However, the entity is not responsible for providing the flight itself, which will be provided by the airline. Okay. The entity has inventory risk for the tickets because they are purchased before they are sold to the entity's customers. Right. So Make My Trip ने पहले खरीद चुका है टिकट, ऐसा नहीं कि जितनी बिकेगी उतना खरीदूंगा. Already purchased. So inventory lying with Make My Trip. Okay. And the entity is exposed to any loss as a result of not being able to sell the tickets. The entity has discretion in setting the sale price of the ticket to the customers. The entity concludes that its promise is to provide a ticket that is a right to fly to the customer. On the basis of the indicator, the entity concludes that it controls the ticket before it is transferred to the customer. Thus, the entity concludes that Make My Trip is a principal in this transaction and recognizing the entire revenue, which is gross amount of the consideration to which it is entitled in exchange for the ticket transferred. Right? Is that clear? Is that clear? So in this case, Make My Trip will act as a principal, not as an agent. Make My Trip will act as a principal. I hope it is clear to all of you, friends. I hope it is clear to all of you. This principal agent concept must be clear to all of you. Important concept, many time question was asked for this principal versus agent, right? So you guys need to understand this concept, right? That who owns the inventory risk, who has a discretion of setting the prices. So you have to see that part. Okay. Is that clear? Illustration number 26 is clear. So friends, in this case, agent, while agent is acting in the shoes of a principal in this case. Okay. Friends, in case of a consignment, right? So in case of a consignment, for example, there is a consigner and there is a consignee. Okay. So in case of a consignment transaction, so when the I am a consigner, you are the consignee, and consignee is selling goods to the customer. So in that case, when the goods are actually sold to the customer, then only revenue is going to be recognized, right? In case of a consigning arrangement. Friends, now we'll discuss one example of right to return. One example of right to return. For example, you must have heard that you went to buy a product. Let's say you went to buy a laptop from the shop. So you told that I need Dell laptop. Okay. The customer, just hold for a minute. Ojha, Ginny, sir, please explain again the consignment concept. So guys, principal agent concept you have understood. There are some consignment arrangement also. What is a consignment arrangement? For example, I am a company, okay, A Limited. I have multiple depot. You understand depot? You understand warehouse? I have multiple depot. I have multiple warehouse. I have enrolled many agents. Many agent means consignment agent, right? So in that case, in case of a consignment, what I am doing? So I am a company located in Delhi. I have opened my depot or warehouse in multiple states, right? And I'm manufacturing goods in Delhi, and I am delivering those goods to the depot or to the warehouse in the multiple states. Okay. Now what happened? I have delivered all those goods to those consignees. So whether I should recognize the revenue when I deliver goods to the consignees, can I recognize the revenue? So standard says that in case of a consigner-consignee arrangement, the risk and reward does not transfer until and unless the goods are sold to the end customers, right? So revenue is not recognized when the goods are delivered to the consignee, right? Because the control of the inventory has not been transferred. The control of the inventory still lies with the consigner, the company, right? So revenue has to be recognized only when the goods are sold to the customer. And who will recognize the revenue? Directly the company will recognize the revenue. So this is the concept of consigner consignment. Okay. This is the consignment arrangement concept. Now we are discussing the right to return concept. For example, you purchase a product. The classic example is Amazon. You guys must have purchased goods, mobile or anything from Amazon or Flipkart. And whenever you bought a product, you can go to Amazon app. And if you have not purchased anything so far, you can at least go to the app and you can see for every product, there is a return policy, like 50 days return, 7 days return, 1 month return. There is a return policy for every product. So friends, if you are buying a product and there is a right of return also, means if you will not like the product, you can return that product after some time. So the question is whether this right of return is a separate performance obligation. Whether this right of return is a separate performance obligation. So standard says that this right of return is not a separate performance obligation, but with your past experience, you are aware that if I'm selling 100 goods, 100 product, 20 product will be returned within the return window. So you have to estimate the impact at the time of recognition of revenue. You have to estimate the impact, right? So friends, I will explain this concept with the help of this example. This is nothing. This is an estimation of impact of return of product. A retailer has a stated policy that any product may be returned within 30 days. Based on the past pattern, 10% of goods purchased are returned within the 30 days window, right? The same question was there in the ICAI study material also. Okay. So I will not take the ICAI study material illustration again. So the same question is there. A retailer has a policy that any product may be returned within 30 days. Based on past pattern, 10% of the goods purchased are returned within 30 days window. What does it mean? It means if the company has sold 100 product, so 10% will be returned within 30 days. Means revenue should not be recognized for at least 10%, right? On 15th March, the retailer enters into a new contract and sells 100 units costing rupees 20 unit per unit at a price of INR 30 per unit. So on 15th March, the retailer enters into a new contract. For how much unit? 100 units. On 15th March, right? So what is the risk of return? The return window is 30 days. Means up to 15th April, out of this 100, 10% means 10 units may be returned. Okay. And the cost of such unit is 20 rupees. The sale price is 30 rupees. Means inventory cost is 20 rupees and the sale price is 30 rupees. The retailer is unable to identify or unable to assert that it is highly probable a significant revenue reversal will not occur for the variable component, that is the 10%. And retailer, as per his estimation, he concludes that as per my past practice, past precedents, the return will not be more than 10%. So how revenue needs to be recorded? Friends, in this case, revenue needs to be recorded for 90 items, but the company has received money for 100 items. Okay. What is the accounting entry? Let me explain with the help of the accounting entry. The variable consideration, that is 10%, which may be returned, cannot be recognized until 15th April, when the 30 days right of return lapses. Following entries will be made on the sale of product. Okay. So friends, when you sell the product, what is the sale price? What is the sale price? When you sell the product, what is the sale price? 30 rupees per piece. How many products you have sold? How many products you have sold? So let me take you on the Excel file and we will discuss the accounting entry. Accounting entry in case of right of return. Right? First accounting entry. Entry when goods are sold. Entry when goods are sold. Right? On which date? 15th March. 15th March. What is the accounting entry? Cash account debit. Cash account debit. By how much? 30 multiplied by 100. Cash account debit 30 multiplied by 100. Correct? Cash account will be debited 30 multiplied by 100. To revenue. How much? So revenue has to be 90 units multiplied by 30. And this is my 100 units multiplied by 30. So this is credit. By how much? 90 multiplied by 30, 2700. Difference 2. Refund liability. You need to create a refund liability. Credit for how much unit? Of course, for 10 units. So 10 multiplied by 30, 300. Whether this entry is clear to all of you? Yeah. Whether this entry is clear to all of you? Now the second entry. So you have created a liability. कि आपको पैसा वापस देना है, but आपके पास 10 इन्वेंट्री भी तो वापस आएगी. 10 inventory will also come to you, na? So you have only recognized revenue. You have not recognized your inventory outflow. Second, credit inventory to inventory. On 15th of March, your inventory has also gone on 15th of March. What is the quantity of the inventory? 100 multiplied by 20 at the rate of 20 rupees. So 100 multiplied by 20. Correct. 100 multiplied by 20. But you have to debit your cost of sales because you understand that 90 unit will not come. I have already sold 90 units. This will not come. So you'll recognize a cost for 90 unit. 90 multiplied by 20, 1800. Then if you have a refund liability, you would have some asset also, na? Right to recover, recover asset, debit. How much? 10 items. But here you need to recognize your cost. Your asset needs to be recognized at cost. 10 multiplied by, multiply by 20. 200. Clear? I hope this entry is clear to each and every one of you. I hope this entry has been clear to each and every one of you. Sir, what happens? What happens on 15th of April? 15th of April. Sir, what happens on 15th of April? Assuming no one has returned. Assuming no one has returns. So, entry after lapse of 30 days window, when no one has returned actually. Correct? Correct? Shall I talk about this entry when no one has returned? In that case, what you are required to do? First entry, you have to debit your refund liability, which you have credited. You have to debit your refund liability. Refund liability debit. Refund liability account debit. Instead of credit, it will be debited. And right to recover asset. Right to recover asset, you need to credit. Right to recover asset, you need to credit. Credit, right? You have debited your refund liability by 300. You have credited your asset by 200. Where the next credit will go? Where the next credit will go? Debit refund liability by 300. Credit this by this. Friends, don't you think you have to recognize revenue also? Don't you think? Earlier you have only recognized revenue for 2700. Now you have to recognize revenue also. To revenue credit. To revenue credit. For how much of product? For this 10 product. At what value? At 30 rupees. 300. 10 multiplied by 300. Sorry, 10 multiplied by 30. So you have credited revenue, but now you have to debit cost of sales also. You have only debited 1800 as a cost of goods sold. So cost of sales debit. Cost of sales debit. For what? Cost of sales debit for what? Again, 10 unit multiplied by 20. So friends, can you see your entry has balanced 500 credit, 500 debit? Yeah. Are you okay with this entry? Have you understood this entry? Yes or no? Yeah. So friends, we have discussed the principal agent concept. We have discussed the consignment concept. We have discussed the right to return concept. So whenever the goods are sold on the basis of sale on an approval basis, means right of return basis. Right of return is not a separate performance obligation, means whenever you are selling goods, you have to factor the estimated right of return. Okay. And actually when the window lapses, then you have to actualize this aspect. I hope it is clear to all of you. I hope it is clear to all of you. So friends, for today, I'm concluding the session as far as concept is concerned. So today I have discussed a lot of concepts, a lot of example and illustration, lot of examples and illustration for determination of performance obligation. So if you have any question, would be happy to discuss if you have any question in the next 5 minutes. So Abracase has raised the hand. Abracase, please unmute yourself.
Good morning, sir.
Good
Sir,
morning.
in this last case, on the first 15th April, can we make direct entry by reversing both that right to return and return liability and
And
directly
P&L.
giving effect to the COGS and revenue?
Sorry, I haven't understood. So, Abracase, are you able to see this entry on your screen in the PowerPoint presentation?
Yes. Yes, sir.
Yes. So, yes, you can pass this entry also. Refund liability to revenue,
That's
cost of sales to asset. You can pass this entry also.
that's what I'm. Yes, yes. Okay. Okay.
So, this is what I
Okay. Thank
passed
you.
also now in a single entry. What I have done, refund liability, asset, I have reversed, and revenue and the cost
Yes,
of goods
yes.
sold I've recognized. So,
Yes, yes.
exactly this is
Okay.
what I've written. I have done.
Yes. Okay.
Yeah. Any
Thank you.
question from any other student? Any question? Under IGAP, we would have created provision, right? Ayush is asking. Under IGAP, we would have created provision. So, Ayush, under IGAP, we are recognizing the revenue on a 100% basis. And yes, you are right. We would have created a provision. So, when sold on consignment, please give entries for one sending goods to consignee, two sale by consignee. So, Pooja, when we are sending goods on a consignment basis, so for example, the company has sent goods from factory to the depot, right? So what is the accounting entry? So the accounting entry is inventory lying at depot account debit to inventory factory, right? So this is a contra entry of inventory to inventory only. Nothing is recognized. No any revenue is recognized, right? GST implication will arise. But when the consignee is selling goods to the customer, right? Let's say consignee has sold goods to the customer. In that case, revenue will be credited and cost of sales means inventory will be debited. Inventory depot will be debited. Sorry, inventory depot will be, so bank will be, cash will be basically what happened. Cash will be debited. Okay. Cash account debit to revenue, right? To revenue. And the next entry will be cost of sales debit to goods sold on consignment, right? So this will be the entry. Are you clear or should I write down the entries? Vignesh sir, in case 5 number returned before 15th April, then the entry will be same, but account for only 5 numbers. You are absolutely right, Vignesh. For example, 5 are returned. In that case, only you have to prorate this entry to 5 items. Sir, please upload PDF and Excel sheet. Yes, I will share with ICAI today itself, Ginny. Okay. So I will share it today. Any other question? If not, then I will be happy to conclude the session. Any other question? Shall I conclude the session now? So thank you so much, participants. Thank you so much, students. I hope you have enjoyed the session today, and I hope you have understood the meaning of performance obligation. You have understood that performance obligation has to be identified, and performance obligation are separate if it is distinct, different, separate. Performance obligation could be a distinct goods or services or a series of distinct goods or services, right? A goods or services will be distinct, will be considered as different, separate, only if it is individually, goods and services are individually distinct, means the customer can get the benefit of goods and services at their own or with the help of the readily available resources. Number two, the the goods and services are distinct within the context of the contract. It will be considered as a distinct within the context of the contract if there is no high degree of interrelation, integration, customization, modification, and interdependency, right? So this is what we have discussed as a concept, and we have discussed so many examples and illustration to understand this concept very well. Thank you so much. Students, you can drop out now, right? Thank you so much. Yeah, session over. Shilpa ji, are you there? Shilpa madam, are you there? शिल्पा मैडम है क्या? अच्छा। अच्छा अशोक जी, मैंने ना शिल्पा जी को चैट पे ना वो जो भी इलस्ट्रेशन कवर किए हैं उनका टाइमिंग लिख के भेजा था चैट पे। तो वो चैट से आप निकाल सकते हो ना? अच्छा, एक फिर मुझे अभी 2 मिनट दीजिए, मैं फटाफट उसको नोट डाउन कर लेता हूँ, क्योंकि वो यूट्यूब के लिंक में आई थिंक डालना होता है उनको। सो हाँ, सेशन को आप एंड कर दीजिए, लाइव मत रखिए, सेशन एंड कर दीजिए।